This is great news for real estate investors. RBI recently published its housing price index and it is up by over 4.6% in September 2022 quarter. Now you may think, what is HPI? HPI stands for Housing Price Index, which consists of the real estate price in the top 10 cities of India. And that is up by over 4.5%. This is great news. The last time we saw this kind of a year-on-year increase was in the year 2018 December, where it went up by 5.1%. This is a definite great news for us all to rejoice, especially those who have invested in real estate. Now, what are the factors that contributed to this big hike? The first and definitely being the pent-up demand. In the last 2 years, a lot of us have gone back to our hometown, away from the cities that we used to live in. A lot of people thought work from home will be the policy for the next few years, but things have suddenly changed and quickly changed. I was talking to the CEO of a very large company who's also my client. He said, going forward, while work from home will be there are also going to be work from office. So 3 days of work from home and 2 days of work from office is going to be the norm going forward. So many of us are compelled to come back to the work city, and this should create enough demand for real estate. It's a different thing whether you want to buy or rent, but there is going to be demand for real estate, and that's the reason why the prices should have gone up in the recent days or so. The second and the most important reason, in my opinion, is clearly the gains that we have all seen from the tremendous amount of rally from the stock markets in the last 2-3 years. Yes, we all want to diversify, and many people did invest in equity during June, July 2020, and that has yielded great returns. Now, what do I do with that money? I can't keep putting money into equity, and then you started looking at real estate, because of which the prices could have fortunately gone up for a lot of people. The third is a lot more internal. In my opinion, the steel prices are up, the cement prices are up. So for all you know, though the prices have gone up, it is not because of the demand, but because of the input cost has gone up, and that can or could have contributed to the price hike to the tune of 4.5% in the real estate in these top 10 cities. Great, what's the outlook going forward? There are 3 major risks that we are looking at. The one and the most important one being the home loan interest rates. The interest rates are on the rise. They have gone up from anywhere between 6.5% to 8.5% to 9% already. This is terrible news for a lot of real estate developers, because most of it is on borrowed money. So if the interest rate is going to be 9%, I don't think the demand can be sustainable for long. Though I strongly believe that Indian interest rates in the longer run will be far less than where we are today. So this can actually stop you or postpone your purchase of home, which can lead to lower demand. This is not great news, but I think it's more short term than long term, because at the end of the day, we all want to buy a home, isn't it? The second reason is inventory. There's a lot of inventory, and every real estate developer has been holding on to it, though their holding capacity is slowly on the wane. I think at some point in time this will break, and this can lead to a lot of supply in the market, which can push the prices down. And the third reason being, even though the prices have been stable or grown a little bit, I still feel real estate in a lot of pockets is still overpriced. So if you're someone who wants to buy in a certain area in Mumbai or in Delhi, it has become extremely unaffordable. I'm just talking about few pockets. So those pockets may not really see great price hikes. Now you may think, should I buy real estate for investments or not? See, real estate is very, very cyclical, just like any other asset. You may make tremendous amount of return in a certain period of time, but if you don't exit, you may see flat returns for a longer period of time. And that's what has happened between 2004 to 2013. The CAGR growth of real estate was close to 20%, But between 2013 to 2022, it is just 2%, while the inflation has been 7%. So net, I think at this point in time, we are at the beginning of a new upcycle. The return may not be as high as 20%, but I think if you're someone who's sitting on the fence on whether should I buy it or not, please go ahead and buy it, provided you are going to live in it. On the other hand, if there are certain pockets of development where you see tremendous amount of growth in the next 3-4 years and you're getting it at a good price, go ahead and grab that opportunity, because I think real estate upswing is on its way. So net, take a prudent call, look at the area. It cannot be very generic saying everything is looking good. Analyze it very well and then go for that purchase. I hope you like this video. As usual, happy investing.